Hi, welcome to the video, Dave, which is on the 12th of October. We are on Wednesday. Today's video, we're going to give our weekly Forex forecast and pick out some pairs which we think can offer really good risk-reward trading opportunities. We'll go over to the charts in just a moment. Now, we have plenty of volatility in the markets at this moment in time, and the US dollar has seen a huge move to the upside. We've been bullish for many, many months, and we still remain bullish. The dollar is supported by really big fundamentals. They're not going to be turning around anytime soon. Now, in terms of this forecast, it's a bit later this week. I wanted to do it before the major news event of the week, which is US CPI. Now, you may see a pullback in the dollar on CPI, but that pullback will be a buying opportunity. There's also plenty of crosses that look interesting as well. In terms of the volatility, it's high in the markets, which is really good for us as FX traders, and it will not be dying down anytime soon. Right, we're going to take a look at the pairs. Just before we do so, though, in terms of learning all our trading techniques, our strategy, and also checking out our daily technical sentiment analysis of 14 FX pairs, if you go to the link beneath this video, you can get live access to our member center. Now, in terms of live access, that will end shortly, so you can lock it in now, and also for a limited period you can get a discount on your membership as well. The US dollar has been very strong. We're priced in USD, so we've done a discount to compensate for this. So just go to check beneath the video for more details, and if you want to join our member center, just put the coupon in at checkout. Now, in terms of also beneath the video, you can follow our Facebook page and join our Facebook group of traders if you wish. Right, let's go and take a look at the opportunities. Right, first chart is Euro USD monthly chart, and I'm going to go to the daily chart in a moment. Just the monthly chart to see the big picture, and what you can see is a big decline that's been going on for well over a year. In fact, this year you've only got one blue candle. Now, a lot of people are saying, well, the euro is oversold, dollar is overbought. No, the dollar is not overbought. The euro is going far lower in our view, probably another 700 odd pips. Okay, now in terms of our style of trading is to catch big moves. Okay, now you can't catch big moves unless you know the fundamentals, big fundamentals and sentiment behind the charts. Now, in terms of what I want to do before I go and look at Euro USD daily chart and the other daily charts, I just want to summarize the big dollar bullish fundamentals. If you're familiar with my views on this, you can skip forward the next few minutes, but just summarize very quickly why the dollar fundamentals just not turning around anytime soon, or the bullish fundamentals. This is the dollar index, which is the dollar against a basket of currencies. You see a gentle rise here, and then 2022, look at the rise. Okay, it's accelerating. You see the accelerated trend line I've drawn in. Again, got a lot of forecasters saying the dollar is overbought. It isn't. It's probably going to 120, this index. So plenty more upside. Now, why is the dollar so bullish? This chart here, it's not a very clear chart, so I'm just going to summarize it for you, is how important the dollar is in the global economy. The majority of loans that go into the global economy and trade invoices are in USD. So here I'll just read it out. 96% of trade invoices in the Americas, 74% in the Asia Pacific region, 23% in Europe, and 79% in the rest of the world. So it's massive amount of loans and financing in the global economy that the dollar provides. Now, the reason the dollar is going higher is because the global economy is slowing. So that means that less loans are granted. Why is that important? Because if you grant a loan in USD, you obviously sell USDs and buy a currency in another country. The loans are slowing up. Okay, global economy is moving into recession. I'll come to that in a moment. Also, a hawkish Fed, higher interest rates means loans are not so affordable, and banks very often will call loans or credit lines back to the book. So the foreign currency has to be sold and the USD has to be bought. It's a huge bullish fundamental for the dollar. If you believe the global economy is going to turn around, then you would sell the USD. We don't. We think the dollar is going to continue to firm as the global economy slows up. Now, another fundamental is what's called quantitative tightening. The Fed pumped a huge amount of dollars into the global financial system. Okay, when COVID hit, they're now reducing those dollars in circulation, basically taking them out. You can see it on this chart. Now, in terms of the rate that they're removing dollars, it's speeded up this month, and it's the equivalent of a 2% hike in interest rates. Okay, so that big bullish fundamental should support the dollar. Is the global economy going into recession? Put up this forward-looking indicator here, which is ISM manufacturing, the 30-year mortgage rates. Now, you don't need to know exactly how it works. We can see most of the time the blue and the red line aren't too far away from each other. They are here. This blue line will probably catch up with the red line. Okay, global economic outlook, I put it going forward, worse than 2008. Also, the dollar is supported by geopolitical problems around the world. Let's take Ukraine, for example. It's a safe haven, so people buy dollars. Okay, there's also been a huge problem in the UK, which I'll come back to later on in the gilts market, which creates risk off demand for dollars. Okay, now in terms of CPI tomorrow, you could go and look up what's forecast. It'll probably be around forecast. There won't be a big miss. Okay, inflation is not coming down quickly. I've done plenty of notes in our weekly market update if you want to go and take a look at them. Okay, so you might see the dollar just pull back on the expected, but it won't be a big pullback. Okay, big trend is up and will remain up. In terms of the euro, you get a lot of commentators bullish on the euro and saying it's oversold. This chart is a good one because it shows the current account. That's basically how much Eurozone earns. Now the Eurozone is going down. The current account is going down because obviously Eurozone is spending so much money on energy. Euro USD, the light blue line, will follow the dark blue line, which is the current account. Okay, so they're the bullish fundamentals for the dollar. Now we need to go and look at some daily charts, and so of course it's Euro USD. First, let's go and take a look at it. Right, first chart, Euro USD. Now, in terms of you're new to our videos, the technicals are kept simple. We use the minimum of trend lines. We've already got a bias in the fundamentals and sentiment before drawing the chart. So just want to focus on big levels. We think there'll be big institutional order flow around. We do use volatility as a backup to our view and also momentum. Now, in terms of this chart, I drew it this morning. I look at the price tonight, but there hasn't been too much change. Well, one thing I'll say, which I say frequently, is we only look at price action twice a day. I don't think you need to look more if you're following big trends. Okay, otherwise you get sucked in to all the twists and turns. If you look too frequently, that distracts you from the big picture. Now, in terms of our position, the same as in the last video, 99.30, come down a couple of hundred pips. This is the key level. I think this should hold on a close basis. Now, if you're coming in fresh, I would sell a break of this low here, second candle back. Okay. However, if we rallied and we took out the 98 level, I'd put our stop tight behind it at 98.40. I would just wait to sell back through the 98 level with a stop behind these two red bodies, 99.40. Okay. So you can take it on a break lower, or if we did rally, you could wait for it to come back through 98. Now, in terms of anyone in the member centre, I will take half our trade off tonight in the PM update or tomorrow morning. Then we'll look to place it back in on a rally or weakness. But in terms of the euro, I just don't think it's got much upside. USD got really bullish fundamentals. We've seen the big trend is down. On the other side, the euro fundamentals are terrible. We looked at the current account in my summary earlier on. But also, what about interest rates being raised in Eurozone? That's going to send the economy into recession. They won't bring inflation down, which I've discussed in previous videos. You've got political divisions as well. A lot of people are optimistic about the zone's future. We don't share that optimism. We think we're going down to 90. Okay, so a long way to go, another 700 pips. So just look at the price tonight. It hasn't changed too much. Just low volatility as we wait for CPI tomorrow. So very bearish of the euro. Next pair I want to look at is AUD USD. Right, we're on AUD USD. Now, in terms of this trade, we've been holding it for a few months. We've got a lucky entry, 70.90, just on this red. They've just fallen really nicely down to 62.64. Now, in terms of this one, still plenty of downside potential. You can see my target 60, then 55. Now, in terms of Australia, it's a commodity producing nation, very sensitive to the global slow up because obviously commodity prices will fall. Okay, so yeah, plenty of downside. How would you play it? Now, in terms of this one, you could sell back to this first level resistance, take some weakness, or sell a new low after CPI. Now, in terms of, let me just go to what we're doing tonight, AUD USD. We're just below the 63 level. I think if we rallied above 63, you could just sell back through the round number, or like I said, take a new low after CPI. I don't see much upside. If we were taken out, we're up, our stop is back behind the 64 level. We just sell back through 64, stop behind this cluster of candles here, resistance, and the 20-day moving average, so something like 65.30. I don't see much upside, but you never know. Okay, but yeah, good downtrend and hopefully more downside to come. USD CAD. We're in at 136.50. Got in there, and we're just kind of hanging around. This high needs to be taken out. If it is, I think you could buy through the high. So let me just have a quick look at what it's doing tonight. USD CAD. Yeah, 68. Sorry, not 68. 138.60, and then I think the stop could be behind here. It's 137.20. I'd go back behind the round number, so 136.80. Okay, you could always take a dip. If we dip back, buy some strength. But it looks like we're just going to be quiet into CPI. So yeah, this one's got plenty of upside. 140, 145. Again, a commodity currency. So yeah, big fundamentals are bearish for it. Next USD pair I'm going to do is going to be, sorry, I'll go to it, USD ZAR. All right, USD ZAR, we've seen a big uptrend. You can see it break the 20-day moving average here. Briefly through it there, immediately bounce. Through it there, bounce, and looking quite perky. Now, in terms of this pair, it's very fast moving, very volatile. The ZAR is, or South Africa is an emerging market, relies heavily on dollar funding. The global sub is just so heavily bearish for the rand. How would you play this one? We're looking for 19, which is up the top of my computer screen. That's the monthly resistance. Let's look at what we're doing tonight. We're strong. So what you could do is buy a new high tomorrow or after CPI, and you could put your stop behind this level here. Say 18.06. You can see the bodies the bodies lining up there. Or if we dip back to 18, just buy strength off the number. Okay. I think this trend could even actually go above 19. But you could get a pullback. If you get a pullback, it will be a buying opportunity in our view. Where to next? USD SGD. I did this in my last video as well. Decided to take a long. Got it now. Now, in terms of Singapore, heavily exposed to the global slow up again because it's a massive trade hub, does a lot of business with China. China's got big problems. Plenty of upside in this one, going for 150 on the upside. So again, up the top of my computer screen. How would you play it? I would just come through the double top here, 144.30, then you stop. You can use the same stop as us, 142.80. That'll give you a really good risk reward. This pair, I don't think is doing anything tonight, but let's just check it just in case. USD SGD. It's down a bit. Yeah, so wait for some strength, or yeah, you can, if you move lower, buy strength off the next round number and 20-day moving average. Okay, plenty of dollar pairs to look at. Just looked at some of my favorites, but yeah, dollar just generally bullish across the board. Now let's look at some crosses. I'm going to look at euro JPY. Now, in terms of euro JPY, we had a position in at 143.20, a stop at 142.40 this morning, and we were pressing against the 142 level or above it, against this resistance level. I was hoping it wasn't going to break, but it did. So in terms of this one, sorry, we're going to go euro JPY. In terms of this one, we've got clipped on stop. So go through 142, 141.80, stop behind these two red bodies here, round number 143.30 in my view. Or if we carry on the upside through 143, sell back through the round number with a stop behind this double top here, 144.30. I think in terms of the euro against the yen, it's very historically overbought. Okay, I think if the dollar goes up tomorrow, it'll go up more on the euro than it will on the yen, which means obviously euro yen will fall. So yeah, really good downside potential to 138, then 136. So just a little bit of profit out of this one. Hopefully we can get a big fall in the pair. Now, where should we go? Right, we're on GBP NZD. I did feature this in a video just over a week ago. Now, we think the pound is due some downside. It's overbought. Fundamentals are in the video. You can look it up, my GBP video, or look in the Facebook group. I posted some info there. But in brief, the UK budget did nothing to inspire the markets. And basically, you've got a real problem in the UK gilt market at the moment. So we think the pound will come down and correct, okay? Now, when I did the video, we were on this big blue here. We decided to take the red, okay? This came in short, then got taken out on this blue for a loss. Now, we stalled at the 2 level. That's a big, big level, okay? So we came in on the red, come down, up a bit, down, up. Yeah, really volatile markets at the moment. But this morning we had a couple of hundred pips, and I just don't think the pound is going to go too much higher. So I think it's a good sell for fresh positions. Now, in terms of how you play it, GBP NZD rallying back up. Now, if I was coming in fresh, I'd just come through these bodies here. 197 is a round number there, so go 196.80. Stop behind the two bodies I'm highlighting in the tail here at 198.40. Then look for a move down to 194, then 192. It should give a decent risk. Well, if our view is correct, it's a decent risk to reward. But yeah, very volatile markets. So it's better to go for bigger moves and use, you know, kind of sensible stops. Otherwise, you just get chopped up by the noise. So we'll see if this one comes good. Another one I featured in the GBP video was GBP CHF. I really like the look of the CHF longer term. You've got no real problems with inflation in Switzerland like you do in the rest of Europe. You've got a hawkish central bank. It acts as a safe haven. It had been a big bet downtrend. Then we rallied strongly. We got above 112. So we just sold back through the round numbers. Hit top 111.80. and we moved a little bit to the downside. This morning we're at 109.88. Okay, so a couple of hundred pips, but that's since changed. Okay, so the GBP has rallied. So we've come back up through the 110 level. And my view on this one now is if you want to come in fresh, just come in through 110. Okay, then you want to stop back behind these two red bodies and clear of the tail, looking for a move to 106, and then longer term down to the 1,000 level, par level. So yeah, it looks like a bounce. We're trying to get back up, hopefully failure. Let me do another pair now, which is a Swiss pair as well, Euro CHF. Now, in terms of this one, basically we got up to 98, sold at 97.30. We drifted lower, we haven't done much, okay? Now, in terms of this one, again, there's plenty of downside potential, in my view. Hold on, Euro CHF. Not doing much at all. You could wait for a bit of weakness and sell through this blue here, which is also the 20-day moving average. So let's say 96.30, or if we rally up, just sell back. If we got above 97, sell back through the round number. In terms of the downside potential, down towards the 90 level, in our view, so it'd be a good risk to reward. So there's some pairs to look at. I was going to look at a few more, but I've run out of time today. So yeah, very volatile markets, and we'll see what happens tomorrow with CPI. Hope you found the video useful. Thank you for watching. Take care. Have a good day.